Hello everyone, this is Calvin, Professor C here. So today I'm going to talk to you about a little bit more technical stuff. Specifically, how much you should lien your house with the bank. So you may say, hey, I am borrowing a mortgage. Obviously, I need to lien my house with the bank. I need to do a mortgage, right? But a lot of people do not know that actually you have two choices to do that. And let's look at the detail, okay? So the first choices is the mortgage can be registered at 100% of your purchase price. So let's look at this example. Okay, the house is, say you purchase this house at $1 million. The actual mortgage is only $600,000. In this example, then the lien would be $1 million, which is the purchase price. So you may ask, so what is the benefit of doing that? And I'm going to tell you. So the first one is save costs. So how do you save costs? Well, say when the house price increase, you can increase your mortgage amount without incurring the legal cost again. Now, mind you, you have to re-qualify your new mortgage, but once you get the TDS, GDS, everything good, and they would say that, oh, you qualify for a new amount, high amount of mortgage, then you do not need to incur the legal cost again. And obviously it is up to the maximum of the original limit. So in this case it's $1 million. So let me give you an example using the same example. Say that this is how you set it up at the beginning. Say 5 years later, your house is now worth $1.5 million, and you say, I actually want to take out another $100,000. So from $600,000, you want to increase it to $700,000. So you go into the bank and you say, I want to increase my mortgage by $100,000. Can I do that? Then they will ask you for income proof, all that stuff, do a credit check, and if they say yes, you are a good candidate, good candidate for a $700,000 mortgage, then you do not need to incur a legal cost again. Now that is up to $1 million. So if your house is now worth $1.5 million and you want to go in and get a mortgage of $1.1 million, for example, then yes, you need to still incur the legal cost. Okay, so I hope you understand that. So the first benefit is save costs. The second benefit that I can think of is increase security. So what that means is, though, just want to let you know that the effect is not huge, but it does slightly increase the security, the protection against mortgage fraud by making the fraudster a little bit more difficult to fraud you. I would compare that to say that you have a safety lock on your car, right? I don't know if you know that some before all those alarm, people put a T-bar or something like that on their wheel, on their steering wheel, and so that people, when the theft try to steal their car, they saw that, they say, okay, let me steal the other car instead of this one, because this one, although I can still take it, but it will take me 5 minutes, that one it takes me 2 minutes, something like that. So this is kind of a similar situation, right? It does give the fraudster a little bit more work to do, and hopefully when they see that you have a 100% charged mortgage, then they will try to fraud the other guy instead of you, right? Okay, so that's one option that you can have your mortgage set at. And the other option is the mortgage is registered at the mortgage amount. Okay, So same thing, same scenario. You buy a property for $1 million. Mortgage is $600,000. The lien is actually just $600,000. So you may say, okay, well, what's the benefit of doing that, right? The benefit of doing that, I would think, is easier to obtain a second mortgage. So say that when you need to get a second mortgage, right? Just as the other example, if you need an extra $100,000, so instead of $600,000, now you need $700,000, right? You are not stuck with the original lender. You can go to a variety of lenders that offer second mortgage and get it from them without breaking the first charge mortgage. And that may include like, home trust or even private mortgage or something like that. And so it gives you a little bit more like option to choose from, and maybe in the future when you need the $100,000, that you might need a little bit more option to obtain the approval, because your original mortgage lender may not approve you at that time. So you have a little bit more choices to choose from, right? So you may ask, okay, well then how should I choose whether I should charge my mortgage register at 100% of the purchase price or just the mortgage amount? How to choose? Well, my recommendation is, if you are confident that your original lender will approve your mortgage in the future, then I would say go with 100% fully charged mortgage, register at the purchase price. Otherwise, better stick with the second option, which is register at the mortgage, the actual mortgage amount, right? Say that you're making $500,000 income and you just want to increase your mortgage from $600,000 to $700,000. Well, then there's a pretty high chance that your original mortgage lender would approve you, say down the road, 2-3 years down the road, when you need $100,000, then maybe we want to register at the 100% of the purchase price. But if you say, you know what, I don't know, I'm not confident, then better stick with the other option. Okay, so this is a little bit short video. It is a little bit technical. Some of those are my own opinion, the pros and cons. If you think otherwise, leave me a comment on the YouTube section and tell me that what I'm right or I'm wrong, or whether you agree or not. And I will see you next time. Okay.